And some business stories, the federal government says there is an ongoing effort towards increasing the production of oil and gas to meet an increasing demand for the product. This was disclosed at the 23rd Nigerian Oil and Gas Energy Week in Abuja, where the federal government highlighted measures put in place to address the low production of products. Helen Osamede Akins reports.
The 23rd edition of the Nigerian Oil and Gas Conference has in attendance stakeholders in the industry in Nigeria and beyond. Their convergence is to provide industry players the opportunity to discuss the most pertinent issues facing the industry with the aim of developing solutions that will clearly define action points that will take the industry from deliberation to action. One of the issues on the top burner is the need to increase production in oil and gas to meet local and international demand for the products. The federal government acknowledged the fact that Nigeria has been producing oil for decades, yet production is still low.
When we increase production, when we have production, then we'll get real value. We'll be able to get the requisite, forest inflow, take care of our forest problems. We'll be able to get the money that we need to fund our budget. We'll be able to get, what we need to satisfy energy demands.
Working on mutually beneficial fiscal incentives that will facilitate deep water projects, which will be critical to Nigeria's target of 4 million barrels per day and reliability of gas supply into domestic, regional and international markets.
It is against this backdrop that stakeholders share possible measures to ensure loopholes are blocked to stop the decline in production.
Our pipeline network today, the major truck line delivering crude to California, Okados, and Brazil. As you all know, the oil construction in 1970, older than most people in this room. No pipeline survives. We talk about demanded action for the theft. And we have taken another major decision that will replace these pipelines. On this replacement, no debate. We will not wait for anyone. We will replace these pipelines. When we do, everybody must flow crude into this line. Nobody is going to take a margin of $21 and $10. We will not exist. It's not just a business decision, it's a national decision.
As Nigeria charts its course towards a more just, affordable and sustainable energy system, the Energy Week 2024 is expected to address the industry's most pressing challenges and unlock limitless potential for energy security and a secure, sustainable and equitable energy transition. Helen Osamede Akins, TVC News, Abuja.
The Chief Executive Officer of the AHA Consultancies, Mr. Ademola Adigun, says the ongoing friction between Dangote Refinery, international oil companies, and of course maybe the regulator is largely due to inadequate supply of crude oil to refineries across the country. Mr. Ademola said this when he appeared on our business flagship program, Business Nigeria, earlier today.
Refineries are not very profitable. It's not the very most profitable part of investments. Typically 1.3, 1.2 returns annually. And the refineries in Africa are more profitable than refineries in Europe. And refineries are affected by the price of crude oil. Once crude oil prices rise above a certain level, refineries don't make money anymore. So Dangote investing in refineries is a big deal, and it's something we should applaud. But the second issue, which has been dominating the airlines, is crude supply, availability, and things like other theories of conspiracy and others. I don't think that is actually the problem. The bigger problem we have in Nigeria is insufficient crude to give to people who need it. A country that's supposed to produce 2.1 million barrels, that's barely doing 1.3, can't service all the needs of the market. I mean, the agreements the government, NNPC had with Dangote was 300,000 barrels per day supplied to the refinery, not 655, not everything. NNPC should fulfill that agreement. Why NNPC can't fulfill the agreement is a myriad of other issues exactly. So the issue is insufficiency of crude. So there is no conspiracy from my perspective on supply issues. Is right now, because of oil theft and other issues, we don't have enough crude to give to anybody.
The stock market reshaped prices and moved up to positive directions following renewed interest in companies' equities, Effiong Ekop reports.
Stocks deals hit up the second day at the start of the second half of the year. Index moved from the negative of the previous day to average performance of 0.05% to stressed little gains on investments. It happened as some fund managers renewed interest in high-performance companies recreating portfolios. Access Holding grabbed a better chance of rising in price by nearly 3%. Zenith Bank and UBA followed in the pursuit of gains. Nigerian Breweries and United Capital equally showed strengths in the markets. On the other hand, First Bank Holding was the biggest business loser due to sales pressure by investors. Other trade losers were Transcorp, Dangote Sugar, Oando, and flour mills. 365 million units of shares worth 4.1 billion naira were traded across market subsectors. Effiong Ekop, TVC News, Lagos.
European stocks dipped today, reversing some of the previous day's relief rally, while the US dollar hit a 38-year high versus the Japanese yen as the possibility of a second Donald Trump presidency left treasury yields elevated. Europeans' broad stock 600 index shed 0.5%. France's CAC's 40 dropped 0.65%, unable to hold on to its gains from the previous day. More other for European nations, national indexes, including Britain, Germany, Italy, and Spain, were also in the red. French blue chip benchmark rose 1%. As the first round of voting in the country's parliamentary elections are also very much on investors' minds when it comes to U.S. assets, with treasury yields remaining elevated and supportive of the dollar. U.S. S&P 500 and Nasdaq features all were up 0.4%. China's Ministry of Commerce says it has signed a memorandum of understanding with Switzerland, agreeing to officially start negotiation for the upgrade of the Sino-Swiss Free Trade Agreement, FTSE, as soon as possible. This was disclosed at the year's Swiss Economic Forum, with a special emphasis on pressing topics such as life sciences, sustainable development, advanced engineering, human resources, market access, and regulations. Speakers from the business and political sector of China and Switzerland will discuss and share economic and technological advancements made in their countries.
The field I'm working in, there is an increase in this business, which is executive interim. So executive interim started in around 2000, and there is a strong development, there is a growth of this activity, about 10% every year.
As most people do not know is that really our precious resource, most precious resource is water. Of course, there are areas where it's more dramatic than others, but unfortunately, China is one of these regions, and I really bow my head in front of Chinese government how they handle and organize the water, because normal life in China, you don't feel that we are running out of water.
From Switzerland, the perspective, we should have open markets all around the world, and this is really a serious problem now. Like the Chinese, is also the Swiss is an exporting industry, needs to have access to international markets, and we are looking really seriously bothered about the impact from protectionism all around the world, as it is bad for our economies.
Finally, on the news, business news, crude oil prices were little changed, holding near the 2-month high, reaching the previous session on expectations of rising fuel demand from the summer travel season and possible U.S. interest rate cuts that could boost economic growth. U.S. West Texas Intermediate crude is selling at $83.84 with an uptick of 0.55%. Brent also experienced an upward price review of 0.52%, selling at $87.05. Bonny Light fell to sell at $86, down 0.72%. And for the OPEC basket, crude oil dealers are offering $86.59 with a surge upward of 0.63%.